Welcome back, Titans, to Titans Up. Today we have Eduardo Rodriguez. He's an entrepreneur and a driver behind the regulations when it comes to FinTech and crypto and banking. Eduardo is going to talk to us and guide us through what's really happening as the Trump administration and globally there continues to be a trend of deregulation, and how that could potentially be affecting the markets and much more. So, Eduardo, welcome to the show.
Hey, Jacob, thank you for having me.
Most definitely. Let's answer that burning question right away. As we're seeing this administration in the United States coming in and being pro deregulation to incentivize innovation and accelerate some of the changes that many entrepreneurs seek to see when it comes to digital assets and cryptocurrencies and other forms of technology that are related to that, how much is it really having an impact?
That's a great question. I will call it the $1 trillion question, right? Everyone has been expecting a great deal of change at a fast rate. And as government is a complex animal, I will call it the most complex animal. And in fact, we've been talking about this for a long time. But the reality is that the way that we are actually experiencing the change is going to be somehow a little bit slower than we expected. In fact, I believe that I can speak for a number of members of the industry when we say that the horse trading is happening in the background, and then at the end of the day, you don't see anything happening for an extended period of time. That does not mean that there is no negotiation. Now, we need to probably talk about what is the process of putting together a new regulation. At this stage, we have a very solid base with the largest cabinet in history that has basically endorsed the Donald Trump administration policy of innovation and digital transformation, which eventually, and we hope that this is sooner rather than later, will lead to the actual passing in Congress of these laws that will enable us to have a clear rules of the road. Today, as we speak, we have seen a lot of talk, not so much action. But last week, I believe that we had the new chairman of the SEC appointed. Senator Loomis and Gillibrand have been working for over 3 years and putting together that crypto bill. And if we are lucky and nothing happens, because clearly we need to understand the priority of things, we have first year priorities, which are not necessarily digital assets. If we do get lucky, I believe that we can see an actual bill passing at the end of this year. But most likely, I think that it's going to happen at the beginning of next year.
So then are founders going to start utilizing cryptocurrencies more? If this crypto bill passes, what really will be the change when it comes to this crypto bill passing?
That is again, that's a great question, and I can't really say that I have a crystal ball to see what's going to happen. There is a lot of expectations, and expectations do not mean realities. We need to make that distinction. One of the facts that it is undoubtedly true is that we have seen the adoption accelerate with a number of the institutionals embracing crypto, and in fact, a number of states passing bills to make Bitcoin and crypto part of their own treasury. Specifically, in our realm, what I can speak about is the Wyoming framework. And the Wyoming framework, we have seen that as LLCs can create a DAO, and that allows them to enable innovation within the governance of an actual corporate entity, which eventually can be reflected on the corporate finance process. So last week as well, the government very quietly removed a number of the specific limitations that US banks had to basically cater to the business of cryptocurrency, which is all conducive to a more, I would call it democratic and innovative framework for the entrepreneurs like us. We anticipate that this is going to be clearly a reality within the next 12 months. What is going to be the pace is anyone's wonder, because there's still a number of elements within the government that are not necessarily convinced, and as not everyone is on board with innovation. We have seen that in a number of industries, and banking, being one of the most conservative industries, is probably going to be the most resilient when it comes to pushing back against this innovation, just because it actually removes a number of the fees that they earn for the business.
Definitely. And I think we've started to see that happen anyways, not in a complete grand scheme. It's not like banks don't have fees, but I use Mercury, for example, Mercury Bank, online digital bank, free wire transfers, no overdraw fees, anything like zero fees. Aside from what they do have is I went to the pro version, and what they have is you pay essentially $240 prepay for the year. So it's $20 a month. It's your subscription in essence, but that's only because I went to their pro plan level. So do you think that, like, what does the landscape look like? What are some of the key drivers that will change when it comes to banking? If we look at the spectrum of your top 10, top 5 banks and how they operate, to your neobanks, to your digital banks, to all the way to these kind of quasi crypto and full on crypto type chains and transactions.
Well, I think that thinking about innovation and speaking about neobanks, or basically fintechs that are delivering banking services, the innovation and the acceleration of the path for that mission is obviously accelerating. Mercury, as one of the prominent banks, has demonstrated that by having the ability to automate a number of the processes by implementing what we call Web3 technologies, which includes obviously AI, blockchain, and IoT, allows the democratization and basically the financial inclusion of a number of the segments of the population. Specifically speaking, this is not as noticeable in the US because you have a great banking industry which has large banks, and then you have small banks, regional banks as they call. One of the, I believe, highest proportional impacts will be on the space of how smaller banks or near banks can compete with the large banks. Because in the previous industrial era, most of the large banks would basically expand their reach into the population by physical properties. Basically, they will buy other banks that have branches near you. And today, your bank is in your phone, just as you mentioned with the company that you mentioned, which I'm not necessarily a fan, but I think is doing a great job. And no pun intended, I think that one of the aspects that is important to remember is that no matter where your bank is based, whether you have a huge bank and you're based in New York, or you have a small bank and you're based in Wyoming, like Custodia with Long, which we are obviously supporting, the playing field has been leveled. And so, for instance, in the case of the new generation, your generation, my kid, and future generations, they will never see banking the same as we did. So what we have seen today is that smaller banks have an advantage, an asymmetric advantage over large banks, because unfortunately banking has not done a great job of providing the services that were supposed to be provided. And on the other hand, the new demographic population, like in your case, the millennials, understand perfectly that there is not much science and there shouldn't be any fees for processes that you can automate. Like, for instance, I assume that Mercury offers this solution where you can actually take a picture of a check and is deposited, and immediately you can actually have access to your money. That eliminates the access to banking services. And so when you think about the way that, for instance, NASDAQ, we were looking at the way that NASDAQ earnings have been basically changing over time since the period of 2020, which is just after the pandemic, till 2024, you can see a very interesting trend where some of the listing and trading fees and the growth has basically kept on double digits. I believe it's somewhere around 11%. However, anything that is digital RegTech, compliance, and all the services that they provide on the cloud have exploded. And the compounded growth rate is somewhere in the vicinity of 20%. So it's double that of what they have been expanding on their core services. These combined with some of the cloud services that you can see, for instance, that enable banks or near banks, such as the player that you mentioned, are reflected on the balance sheets of companies like AWS and Amazon, Netflix, Microsoft, what it was called the Magnificent Seven. I don't know what is the current term for them. But when you see the balance sheets and you look at the different segments and income statements for the different years, you can see a huge explosion on the amount of money they make from the cloud, which is directly correlated to financial services. And so if you extrapolate those two aspects, you can see that fintech is really eating the lunch of banking. And we anticipate that this trend is accelerating to the point that today you see a lot of banks getting really anxious and, in fact, trying to buy the competition so that they can actually continue to basically build a moat, as we call it in finance.
So, what are the ways that banks, aside from acquisitions, are there additional or new services that are going to be coming out in your mind, taking advantage of some of these innovations, trying to improve the customer experience and retain their customer base? And then, conversely, of course, on the opposite side is new innovative fintechs that will be taking advantage of these things. How do you see the space emerging over the next 5 years?
That is a interesting question. Again, I think the most vivid example of what's happening is this bank that was launched by Goldman Sachs. And you would expect that Goldman Sachs, being the gold standard for banking and premier banking around the world, would be having no problem getting into the fintech space. But when you actually see the lack of adoption and basically the failure to penetrate into this specific market, you can see that they have a lot of the banks have pigeonholed themselves into very specific, I will call it upper range type of operations where no matter how hard they try, and the name of this unit was called Marcus. I believe it was discontinued and sold to Apple recently, if I'm not wrong. And so what's happening is that there is a very clear boundary that was self-imposed by the banks, and it's almost like they build this moat to keep the enemies at the bay. But what it's actually creating is keeping them inside of their own arbitrarily created boundaries. And so I am sure that a lot of the banks are going to be able to acquire, but as you mentioned, aside from acquisition, the problem is not necessarily the technology or the operation. It is unfortunately the perception of the public, because your generation, and I'm not going to speak for your generation, I don't pretend that I know what your generation thinks, but I think I have a good idea. Your generation and many other of the younger generations have seen a number of the challenges that their parents have actually experienced. And so when you think about banking, your first thought was, I'm banking with Mercury Bank. You didn't tell me I'm banking with Bank of America. You didn't mention the top 10 largest banks. You immediately went to the bank that is servicing your needs based on what you understand as a fair trade deal, which is, I like to cap my fees at $267. So I'm going to shake that hand, pay you up front, and then I'm good.
Yep.
And that's a smart thing to do it. The problem now is, how do these banks survive the basically attack that is coming from sideways, below, and from the top? And that is $1 trillion question. To be honest, I don't think that there is a solution for that problem.
So when it comes down to consumers' life over the next few years, aside from these very popular emerging banks and the players that are standing in the market now, could there be a gap in the way that banking is being approached, or do you think that there's already so much money in it and that it's already achieved such a meaningful, effective standard that, like what we saw with the 2020 crypto boom and before that, I believe it was 2016, that real durable fintech innovation will still take decades to really hit the consumer's experience and the way they utilize it?
Another excellent question. So, in my mind, there is a lot of, I will call it, complex and non meaningful conversations around both banking and crypto. And don't get me wrong, I'm an early adopter, I'm a former banker. As unfortunately, the promises have not been kept, neither from the banking side nor from crypto. And so, one of the key, I will say, differentiators for any of the technologies that will prevail moving forward is the ability to connect actual meaningful change and solutions to market needs. If you do not have an understanding, and I have conversations with a lot of extremely brilliant young men and women every week. And so the problem that I see there is that whether they are employed by the banks or they're employed by fintechs, everyone is so self centered and thinking, I got the solution. This is going to be the killer app, which, by the way, is one of my favorite books. And I highly recommend it. I'm not sure if you have read it. If you haven't,
No.
you should read it. It's called The Killer App. And basically, the killer app is not necessarily, it's not rocket science. It's, look, I have a way that I connect your needs with a solution. I do it for a fair amount of money. I'm not going to try to put a, what you want to call it, I'm not going to pull the bail in your eyes and tell you I am the best. I'm going to give it for free, because you need to understand, just like you did, that there is going to be a cost to doing business. And so you are doing the right thing again by saying, look, give it to me straight. How much is it going to be? And then give me the tier and the pricing processes. I was going over these with my son, in fact, for some project that he's doing. And I said, look, you can give people choices. Some people will want to have it free because they don't see the price, but they don't understand that the price is higher. Just in the case, for instance, with Google or Robinhood, which they tell you they're helping you, but if they're signaling your orders to sit at those securities and they front run you, and when you add the fees, is going to be more expensive than paying the $5. You might as well pay the $5. You know what I mean? If your end game is to actually save money, you really need to quantify that. So, in my mind, when I look at the way that the marketplace is evolving, one of the key differentiators, again, is yes, you might be the smartest person that Caltech has ever seen, or Stanford, whatever university. But have you ever done this before? Do you understand the pain points of the customer? Do you understand how you can actually make money by removing barriers that are arbitrarily put together? And can you do it better than others in a fashion that you can make money and still grow at a pace that will allow you to not dominate, but have and carve yourself a significant piece of that market so that you can actually grow and become a player. And I think the problem today is that you see a lot of companies, both from the fintech side, crypto, and banking. And I'm increasingly frustrated with the promises, the amount of new experts that come out. And I'm telling you, I'm just wondering, when is there going to be someone that is going to deliver? Because you see that every day. I'm keeping tabs on all the tokens that come out, and I'm thinking, you know what? It's great to have tokens if you want to speculate, but has any of those tokens delivered on the promise? The promises of Satoshi? And that is what I think is going to make the difference.
None come to mind. Maybe there's a few, right? I think there's a few like the that became more like development ecosystems on top of those than super businesses like a lot of them tried to be.
Yeah.
They say, here's our token, and we're going to go change the world in 7 different ways, and we're
But
going to
that's the
build
problem. That is the
water in
problem.
Africa. They raise $10 million, and then they just disappear. And on that note, one thing I found pretty interesting that was, I think this was before Gensler left, but that they ruled, or it was before the new SEC head came in, was that they ruled that meme coins are not securities, which a lot of people would say, okay, so what? The so what is for the last few years, I've seen it a lot. I'm sure you have, even just in on social media. Never been involved in any of these myself, but where people and famous celebrities, for example, will go and launch a meme coin, rug it, meaning they'll just sell it out when it hits $2 each, make $30 million, leave everybody else hanging out to dry, and now it's a meme coin, which means that it's not a security, which means that it's essentially not just speculate, it's gambling. And if it's gambling and you lose your money in it, too damn bad. There's no repercussions for that.
Yeah,
So that was one of the things that surprised me.
absolutely. And I'm with you there because that is exactly, unfortunately, the fact is that I don't know the recent numbers, but we were tracking the numbers from ICOs between 2013 and 2018, which was the biggest boom. And statistically, and the numbers didn't lie, 80 to 90% of those ICOs will be dissolved within 6 weeks of that ICO. And
Wow.
so when you actually are trying to build a new industry, and this is the facts, it is pretty hard for you not to actually make the case for regulation. Unfortunately, regulation, the way that it is today, and when you think about regulation and an historical fact, the first company that was traded in the Western world was the East Indian Trading Company in 1620, I believe. Then you realize, look, the system that we have today has been there for centuries. The last comprehensive revision of the Securities Act happened in 1933. That's almost a century ago. The way that we regulate today makes zero sense. The power that regulators have over, even today, when you look at some of the issuers, recent cases where they have overdue, including the issuance of tokens, do not make sense because the idea of having regulation, if the regulation was so good, we would have not had the number and the high frequency of fraud, including some of the closest members of society, like Madoff, which was part of NASDAQ. If the regulation really worked, then we would not have these events happen over the last 50, 100 years. Unfortunately, they have increasingly, and not only in a higher number, but the magnitude has expanded. So then you have to realize that the regulation is out of sync. The way that we see regulation happening moving forward is you need to have access to real time data. It always baffles me when I hear Jay Powell talk about data dependency. What do you mean data dependency? You're actually allowing firms to tell you whatever they want on a 6 month basis, looking backward. This is the same or an analogy of me driving my car forward, looking through the rearview mirror at full speed. Oh, I am actually moving forward. Shouldn't you be looking forward? Shouldn't you be looking just what's happening in the road? And based on your intuition, this is why companies like Tesla are doing great. The self-driving, which by the way, apparently is getting to the point where it's going to be pervasive. The car is actually extrapolating real time data with data from the past to make decisions on real time. And this is really where I believe the regulation should go. Do we need so many regulators? No, we don't need them. They need to go and find a job somewhere else, because the way that things work today is contrary to innovation. Again, I can rant for these about these forever, but you may want to ask me other questions.
One thing that I heard recently, because I have a consulting company in banking, is around, and this is going to connect to the value proposition of a digital currency, is one of the technologies that I was informed about was clearing and settlement technology that would help banks get to T0 from T1. And because it wasn't, in this case, a high margin activity, and it was very tightly knit, the group of buyers and potential users of that technology, that it wasn't a worthwhile pursuit because it wasn't that big of a delta between T1 and T0, meaning essentially atomic settlement. It wasn't that big of a delta to the bank's bottom line. And so if we go ahead.
Sorry, go ahead. Tell me what was your question then.
It's just we look at the value proposition of a digital currency. One of the key things is that its transaction time would be 5-10 minutes, and the bank would be, or the money would be in your bank account, which on the surface level sounds great, but the majority of people, in the way our current financial system is set up, don't have that level of reliance on speed for money. It was built around technology that wasn't able to support that. And so our current activities are orchestrated in a way that they don't depend on that. And of course, innovation is innovation. And if you can make things better, great. But it would seem, because I'm looking at the market as a whole and thinking, I've thought this for many years, and I'm sure people like yourself have also thought this about maybe these technologies are achieving their utmost extent based off the true value that they provide, versus if you look at something like artificial intelligence, the adoption for that, the appetites for that, and the upside for that are absolutely unprecedented. And so if you can compare and contrast those two technologies and their adoption curves and the opportunity therein, and the value proposition, then maybe there's not something wrong with the way these technologies are being adopted. There's not something wrong with the way the consumer is. It's just the fundamental value proposition of those technologies has its pockets where it's valuable, but then it also has its limits. What are your thoughts on that?
I think that there's two aspects to that question. One of them is regulatory, the other one is operationally and revenues. You see, the inefficiencies of the market, again, have been built around a paper based process that required a physical piece of paper to be traded from the New York Stock Exchange to a depository, to the bank, to validation. And so there was a number of hands involved, which required a fee, and also created the potential for problems. When you have paper, can be lost, it can be misplaced, it can be basically credited to someone else. But that is an issue that is not an issue today. Then you have to think about our monetary system and the credit system, which has been in many ways unfairly attacked because we work on a system that is called fractional banking. And fractional banking is both good and bad. There is two sides of the sword. It cuts both ways, let's put it that way. And unfortunately, the problem is that banking is a complex industry that not everyone understands from within. It's like your watch. You can turn on your watch and you can see your Rolex. And if you have a Rolex or a mechanical watch, you say, oh, that's great. It only does these. If you were to open the watch, you will see a complexity that is beyond the mind of most people, including myself. So the problem here is how the little cogs connect with the big cogs and how does that turn that dial. And so you think, oh, I only see a second moving here. Inside of your watch, there's 1,000 moves that happen before that is moving from 1 minute to the next one.
Or in banking, trillions of
Right?
dollars
It's
constantly,
trillions of
constantly.
dollars. One of the largest markets every day happens while you sleep. It's called the repos. And repos every night is a market in the trillions of dollars where banks need to settle their account with the central bank by lending money and basically using the money of another bank to square their books, because at night you need to square your books, right? Until the next day happens. Now, when you have 24/7, 365 banking and trading, that is going to bring a number of complexities to the problem. And one of the things is that the banks used to actually charge money for the repos. So a repo overnight, which used to be guided by the LIBOR, a London interbanking rate, which is no longer, now we have SOFR, basically puts a price on overnight deposits. And it allows the banks to charge a fee for your money that they're not sharing with you, which is a problem, right? For squaring off the balance sheet of another bank that they are trading with. And so this is done in Spanish, we call it compensation chambers. Basically, you are actually squaring off the books. And so these issues have been reflected on Basel III Endgame. The Basel Committee tried to enforce these things. And so the problem is that this is a 100-year, 200 and it's 1,000, 1 quadrillion, $250 trillion problem, which is very difficult to solve because the adoption curve is happening fast, but it's not even 5%. So the problem here is the adoption and a system that is already working. What you're going to need is a period of time for these to start slowly being in an orderly fashion adopted by different parts of the banking sector. And the banks are going to have to do away with a number of units of business so that they can actually compete moving forward. Because if you ask me today, an actual Bitcoin banking sounds great, but the problem with Bitcoin banking, if you don't have the fractional system, is that how do you issue credit on some asset that needs to be complete and settled every night? Then you need to give and take. It's a balancing process, right? So it's not all good, it's not all bad. In my mind, as a former banker, or as I call it, as my wife calls me, a banker in recovery, you have to understand that a lot of the industry have been built around the technology limitations that we had in the past. And so, as a banker, as a business, you need to make money. And if someone is willing to pay the fees that that you want to charge, that's why there's a bid and an ask. Hey, you're in need for money and you need to pay tomorrow. Otherwise, you're going to be having these issues. I'm going to charge you as much as I can. It's just free market, right?
So, on the note of regulation, back to the present and looking at even the late 1800s, early 1900s, I read a book. It's right here. Oh, I don't know if you can see it on my camera. I think you can. Titan, right over here. So it's about Jay Gould and John D. Rockefeller and a few other gentlemen, I believe Carnegie and one other. And Jay Gould, for example, he really got his start as a stock fraudster
Oh,
in
wow.
many ways. Yeah. And that's not uncommon in that time. Because the way that they raised money back then, like you said, the paper checks, and even then it was paper stock certificates and everything. There was fake stock certificates were all over the place. You saw these guys, they hop on a buggy in a carriage and they'll take your $1,000 and then go, and they're off 3 towns down the road. You're never going to find them. There's no internet. They were very able to manipulate, even if they weren't fraudsters, even though it definitely says they were. But even if someone was doing that and they weren't a fraudster, the ability to manipulate prices, valuations, stories was on a completely different, unimaginable scale to today. And for the benefit of America at that time, thankfully, they ended up doing relatively good things with the money that they were philandering in a sense. But if we look at today, like you're saying with the ICOs, 70 to 80% were done away with in 6 weeks. And that regulation hasn't had its full effect. What is, in your mind, having so much exposure to regulations and the way that they're written and designed and executed, what is the proper approach as we move into this increasingly technological world?
That is $1 million question again. As we have been working with a number of the regulators, and what we have done through this process is provide some feedback. In fact, I think that it will be interesting for your audience to potentially have a link, and I'll provide it to you if you don't have it yet. Behind me, you can see three documents, starting with the one that is above me, which was presented to the European Securities Market Authority when we responded to what was called the DLT pilot. This framework would allow the creation of the sandbox that resulted in what is called today the pan-European marketing crypto asset. And so this exercise was extremely useful. And what we have seen evolve today is a comprehensive regulation that basically addresses some of the huge concerns that the regulators have. Unfortunately, Europe being extremely bureaucratic and having a second layer of government in Brussels has resulted in a extremely complex and cumbersome regulation. And so these, instead of actually facilitating the process of innovation, has discouraged a number of the companies that have been moving to the US, clearly for two reasons. One, access to capital, and two, the fact that regulation in the EU is extremely cumbersome and basically not aligned with the market. On the top here, you can see where my finger is. You can see the document that followed that process in the path, which was created for the UK Treasury. And this document developed the framework related to the financial market infrastructure, which is extremely important and valuable. Everyone thinks that this is going to happen out of the blue, but as you and I know, you need data centers, which is one of the bottlenecks that we have today, to provide cloud infrastructure. And so when you're trying to push the green agenda and then at the same time increase by 5 times the output of energy, you're going to have to deal with realities, which we are going to be finding pretty soon. And according to Goldman Sachs, has resulted in a compound annual rate of return or growth, basically of 125% in the data centers and the demand for energy to just supply enough data for you to operate your banking application. And to the right of me, you see the document that I created with my team, that I led my team to create for what is called the UK, the Bank of England Digital Security Sandbox. And I believe that this approach, having participated in the Canadian sandbox, which it was a horrible, let me restate that, maybe you can call that, having participated in the Canadian sandbox, which was a complete failure in every sense, from the framework that was not formed to the lack of delivery from the regulators. And today you can see that there's really no actual players in that marketplace. The UK has put together what I believe the most comprehensive approach to regulation through the digital security sandbox. In fact, we're in the process of crossing to gate one. We were pre-qualified because we did the work that you see behind, obviously. So the approach that we think that is going to be the most successful is for the regulators to understand that it is very difficult for them to see solutions through their lenses. Again, you can only see problems when you're looking for problems, and you can only see solutions when you're an entrepreneur. So it requires an active process of listening and understanding to the marketplace about what are the challenges that the consumer is facing, as we have discussed earlier today. The approach has to be, in a way, extremely measured, and also has to be clear and transparent. For instance, the UK model provides you a 5 year graduation process where after you obtain your license, the actual regulation that you have to comply with, it is significantly less onerous on the operation of your fintech, or in this case, our token marketplace for crowdfunding and staking nodes. And this provides the opportunity for you to not have to have such high levels of capital expenditure and operational expenditure. It allows you to, for instance, one of the things that we are negotiating with the bank is to have the ability to leverage your team that you have in another jurisdiction. For instance, our core team was based in North America. And this will enable you not to have an incremental linear increase in cost by virtualizing your infrastructure in a real decentralized fashion, where you don't have to have five CEOs, five CFOs, five CTOs, and so forth, but basically using that technology to prove the innovation is possible. And much like Binance, which, much to the chagrin of a number of members of the regulatory agencies around the world, has been denied the licenses around the world, is done and proven really well. The way that CSED has actually expanded globally is amazing, to the point that today they continue to be the largest, most liquid player, and they offer some of the services that no one offers, even some of the large players in the US, which I will not mention. But at the end of the day, I think that the approach has to be, in a way, careful, but it has to be clear. One of the key components of the UK digital security sandbox that we give a lot of credit to the Bank of England is their acknowledgement that you have to remove some of the overhang risk of creating a bridge to nowhere, which is what happened with the Canadian sandbox. After almost $8 million of investment, basically you get to a point where you're told that you can create the most amazing machine, but you can only turn it every blue moon every 2 centuries. So how can you make money with that, right? And the approach has to be in a way that understands that innovation itself is expensive, that if you want to be a leader in the technology, you need to free people, young and old, people that want to do things differently, a sandbox where they can demonstrate the process. One of the challenges that we had with the Canadian sandbox and the European sandbox is that they want you to demonstrate everything before they give you a license, when in essence, and where the UK sandbox is extremely promising, and I say promising because no one has really started operations, but where it's extremely promising is that it allows you to do the right thing. You go to the sandbox to demonstrate things, you contain the risk by creating the walls, and then, just like kids, you get to play and show that you can actually do it in an orderly fashion.
And we talk about we talked about the value proposition of this technology and some of the things that it can do. And at the heart of that is financial inclusion. And that would be aiding those who are either geographically in poor areas or monetarily, economically not wealthy, even rich, even prosperous by any means, to have better access to financial services, to their money, to liquidity, and to opportunity in some ways to grow their wealth, grow the money that they have. And I read a study about in China where essentially after a few years of being very pro financial inclusion, they realized that it was a total waste, and then they just re-centralized everything and made financial inclusion illegal. more or less. And so this was a study of the banks there. And in some ways, when a technology is aiming to help those who are less fortunate, they're already targeting such a smaller batch of the market because the majority of, if just looking at wealth distribution, wealth is centralized in the hands of powerful players, and there's more money there, more liquidity, and they're more likely to take action on things that if it can bring them return versus those who don't have money, it's really hard for them to even put money there, and that money might not even be that much. So when you look at financial inclusion and the way that some of the regulations and technologies play together, and looking at the impacts that the technology can have over the next 5, 10 years, do you have hope for that in general, or is financial inclusion somewhat a esoteric myth that we're chasing and hoping will help to bring this technology into the hands or the broader markets where more of the money is, and maybe through that eventually reach those people? What does that really look like, and how has it taken shape over the last decade up to date?
I think that I can speak about some of the examples in Latin America specifically. It's interesting you asked me this question because I was just writing about it this morning on a report that is going to be presented to the Institute of Mexican Executives in Finance. I was recently honored to participate on a book that is called Banking Regulation 2025 for the Mexican banking sector. And the example that was provided on this document was basically the impact of financial inclusion on the, I will call it the lower deciles in the demographic pyramid, which is in most places extremely wide. And clearly, the income distribution is not necessarily fair. And I am very careful for using the word fair because I am a capitalist and I don't believe in equality. I believe in meritocracy. But when I look at my experience in Mexico, for instance, where we had been living for the last 4 years on a beach town in the Yucatan, where you have zero banking infrastructure, where the closest branch to that population center is 7 kilometers away, and where a bread maker wakes up at 4:30 in the morning to bake and then jumps in a bike and spends 12 hours under the sun, under the tropical sun, selling bread door to door without having access to banking himself. It actually breaks your heart to see that someone that is hardworking is not a person that doesn't want to work. This is a person that is working, has been working since he was 13. And so Lorenzo, who's a friend, and I'm proud to say he's a friend of mine, used to basically come to the door and offer you the most delicious bread that he had made with his own hands. And it would break my heart for him to say, Patron, which means boss, don't worry if you don't have cash, because I would say, do you have a payment system in your phone? Do you have this platform or that platform? Can I send money to your bank? He didn't have a bank. He has been living a life bankless. He's a is basically a great proportion of Latin America, for instance, 45% are debanked. They're people that never had a bank. So when these people don't have a bank and he has no ability to record his income, he never builds a credit record on the bureau. So therefore, he was never able to buy a car on credit, buy a house on credit, which are some of the benefits of our fractional banking. Credit is the seventh wonder of the planet, of the world, is basically credit. But you need to have banking to do that. So he was unable to do that. He's unable to get a credit and a loan to buy his own oven. So he needs to rent an oven so that he can live. And he lives day to day. So one of the solutions that I was looking to provide to him, and what I used to do, is I would give him money up front and say, look, if I'm averaging 100 pesos per day buying a loaf of bread or some cake or something that I will buy to basically consume on a daily basis. Why don't I give you 1,000 pesos? That gives me 10 days of credit. And he said, no, don't worry. Don't give it to me, boss. I trust you. And I said, yeah, you're the one who's coming to my door. You're making significantly less money than me. If someone should be giving you credit, it should be myself, right? We need to shift this mentality. And I'm a capitalist, red-blooded American, if you will. And I'm not an American, but I would be a Republican if I was an American. I believe in enterprise. But just like Henry Ford thought, you need to make sure and you need to understand the paradigm shift that creates having the lower income levels of your economy, which is something that I believe President Donald Trump is aiming to do. And I applaud his ability to attract investment, which I believe this morning was up to $5.2 trillion in commitments. And that's an amazing amount of money. I tip my hat to President Donald Trump. If you are able to bring financial inclusion, the actual monetary multiplier and the effect on your economy is amazing. It will transform your economy in 1 or 2 generations. Yes, of course, you might not see the changes, but this is what happened going back to your comments on the early days of the US when JP Morgan, Rockefeller, the Vanderbilts were growing the economy by leaps and bounds. I have some interesting graphs that I'll be more than glad to send to you where you can see how income went from $10 all the way to $50,000 at the peak of 2018. The orders of magnitude have created the American dream. But that is only possible if the lowest deciles, the people that are at the base of the pyramid, can increase their minimum wage in multiples of 2 or 3 over their lifetime. And this is these technologies, innovation and financial technologies have that power. In fact, I've seen some numbers in Latin America where the lower deciles, people that are basically earning extremely low amounts of money, would be able to multiply their income or the income of their family 3 times by just becoming Uber drivers. And so for you and I, which live in North America, maybe driving an Uber doesn't seem to be the right solution. It probably makes me lose money. But for people in the lower deciles, including in the US, now they have an option where these writing app and hailing app, or whatever you want to call it, allows them to provide an income to their family and then build a credit, buy their home, and then their kid will go to university and their kid will become a doctor. So I believe that this is a key component that needs to be addressed. It needs to be promoted and has to be at the center stage of banking because unfortunately, again, not to vilify banks, but unfortunately, bankers have forgotten the role they should play in society, which is it has to be an engine for economic growth. Yes, it's great to have a proprietary trading unit where you can make a lot of money in arbitrage and all the things. But remember that if the well dries, there's not going to be water for anyone. So you need to put money in the well, right?
Yeah, very few bankers are thinking about that on the forefront of their mind, like that they need to help the less fortunate. So, do you believe that we'll see a central bank digital currency in our lifetime?
I think that we will see that. In fact, I guess I will qualify that. I don't see that happening in the US unless we have a major cataclysm, financial cataclysm that unfortunately seems to be increasingly likely. Does it mean that the CBDC in the US will be equally questionable to the European model? I don't know. But it is increasingly possible that the central banks will attempt to continue to expand their reach for power and control by imposing a central bank digital currency. And again, I am a member, I was an early member of the European Digital Euro Association. I am a member of a number of other associations. I sit in committees and I sit with members of central banks that are members of my circle, as the former, and I believe still sitting down, Mr. Agustin Carstens, who's the head of the Banking of International Settlements in Basel, Switzerland, which is the central bank of central banks. He's Mexican, and I am part of his circle indirectly. I don't know him personally, but I know people that know him. I believe that there is a potential that we will see that maybe on your lifetime. I hope it's not on mine. But I believe that also there is a potential benefit to that if we can find a way to create a second tier. And this is one of the comments that we made to the UK and the EU, which we included on our comments on the documents behind me, which is, look, just because you want to have a CBDC and maybe you have to do that for whatever reason, that does not mean that you should be banning stable coins issued by near banks and quasi banks and fintechs. That does not mean that you should actually quash other attempts. The actual cryptocurrencies, as much as I don't like the speculative aspect of it, they have done well. They have allowed your generation and the generation of my son to have a place where they can learn about finance, where they can apply, where they can dream and they can build potential solutions. So, in my mind, I think the CBDC is not necessarily all bad. The way that it has been implemented in some places raises a lot of questions. And I do not believe, again, I believe in the founding fathers of the US and the actual values of the US Constitution. I do not believe that central banks should have all the power. And I do not believe in a number of other things, but that's for another conversation. My point is that I think that the US should actually have a digital currency, but they should be very careful on what they actually wish for, because it could potentially create a major shift in power, and that's not what we want.
How would it create a shift in power if there was a digital dollar? Because if you think about it, essentially money is mainly digital now.
Yeah,
What
absolutely.
would really change if we were to have a digital or a crypto dollar?
The problem with the current version of what I have been hearing from central bankers in the US and Europe is that they call it an expression of a liability of the central bank. And we need to remember something: the money is not owned by the government, people own the money, because the bank is not a real entity. Natural persons like you and I own assets. And while corporations have been created to actually expand and create multi generational structures for transfer of private property, the fundamental basis of our Western world is private property and freedoms and rights. So when an institution that is not the government, is not democratically elected, has the power to basically tell you what to do, then you have to address that with some pointed questions. Again, there is the aspect of keeping order, market integrity, and compliance with some of the protection measures for the consumer. But at the end of the day, this should not come at the expense of your freedoms and rights. One of the challenges that we see today with the CBDCs is that the bankers have already expressed something that you and I know, which is you'll be able to impose policy and governance through the use of proceeds by saying, no, Jacob, you cannot go buy that beer that you like because you already had 3 beers this week. Who is the government to tell me where do I spend my money? It's your money, right? And so the issue here is a balancing act: is how do we control the actual control, those who control, And how do we express, which is really at the core of this governance and decentralized governance model and democratic model that Satoshi envisioned, by having money that is free and sovereign so that the people can continue to live a life that is according to their dreams, aspirations, dreams, and values of an American republic. And so, in my mind, the American digital dollar should have a lot of features, but the bank shouldn't be able to just shut down your wallet because you stepped away from your home or you said something that they didn't like, because that is not necessarily what the US was built around.
Reminds me of a book that I've read, and I mentioned maybe once or twice in the podcast. It's called The Architecture of a Techno Democracy. And in that, I believe he was either running for or he was a party member to a candidate in the Senate or was on the way to being a senator himself. He was a young guy who wrote this book in the United States, somewhere in the Midwest. And the techno democracy is essentially where the effect of artificial intelligence, digital currencies, and other technologies like that would allow us to have a government sponsored type app. You can imagine, right? That's the easiest way to get things in people's hands, is an application that they can download on their phones that would allow you to manage your money, that would allow you to vote, that would allow you to do various things. And in his mind, it would enable more of what the founding fathers wanted. He wasn't some Chinese expat or anything like that, thinking that we needed more centralized control in that sense. He was thinking that we could utilize those same kind of technologies for things like, if there was going to be a vote on a particular issue in a county or in the state, that rather than needing to be represented by the elected official, which they would still have their place, and we would still maintain a generalized structure in that way, but that the people would be able to have their say over
Cast the
smaller
ballot.
issues. Yes,
Yeah.
digital, and manage that money, manage their money and transact and be paid through this application. So I think it was a visionary proposition and a future for where we could go. And it seems that the more I talk about it and hear about it from different people, that eventually, even if it takes another century or 2 centuries, even, who knows, that there will be these kind of changes, but we don't know exactly when or how they will take shape.
Undoubtedly, there's good aspects to it, but again, as I said, it cuts both ways, right? It's like credit. If you use credit to go party and you spend $10,000, that's a bad idea and it doesn't create anything. If you use your line of credit to take a course or buy a car and you're using it to do business, that's a good idea. There's bad, good, and bad. The issue here at the core of this is not to vilify technology, it's who's behind the technology, right? There's been places where, just like in Venezuela recently, Venezuela is not a democracy, it's a dictatorship, as we know, a socialist radical woke regime that is basically financed by Iran and radicals. And yes, you can run for the election, but if you say the wrong thing, all of a sudden you disappear. So the problem is that if you give too much power, and I'm a tech guy, but if you give too much power to certain people, then eventually they represent the majority. And for instance, myself, I can code, I can read code, but I'm not an excellent coder, and I don't think that I will be able to verify everything in a machine. The only way to verify everything through a machine is through open platforms, as where people crowdfund in a way, or crowd in a group, go and make sure that this technology is doing what it's supposed to do. The problem with, again, with technology is that when it's closed ended or private, it actually can be misused for nefarious purposes. So let's hope that it doesn't happen like that. I also made a point to the regulators saying, look, you shouldn't kill physical money. It has its place and time. And so if you want to give money to the church, it's not the business of the government to know if you're giving $20 to your church, if you want to give it to a cause that is dear to you, if you want to have a beer, why should they know how much beer did you buy? It's privacy. And privacy is at the core of private property. That's why private property exists. And so the actual fundamental values, again, the governance around digital needs to be in compliance with our democratic system, with our values. And when we think about North America, even though I'm currently in Canada and I spend a lot of time in Mexico, which is my second or my original home, we are always looking up north to the US. Is the beacon of light. And whether we like it or not, and I talk to people always because there's all kinds of people that talk about the good and bad of the US. So look, we need to admire the light of the US, the founding fathers and the values. And what we need to make sure is that we support those who are closer and aligned with those values because there hasn't been, and if that light extinguishes, there will likely never be another US. And so that is the message that's what in some ways keeps me at night thinking, how do we preserve the republic? Which is, I
Hmm.
believe, not my job. That is Donald Trump's and company. But I think that's an important message for your generation and the next generations, right? There's the virtues and the values that come from that of the founding fathers. Sorry, I didn't mean to go into to the political arena, but it always goes back to that, right?
It does, and we all play a part in that. No matter if you're in the United States or you're outside of the United States, everyone plays a part in the values that we uphold and the ones that we value in general and hold as to be self-evident,
Exactly.
and the ones that we fight for.
Absolutely.
Everybody plays a part in that.
Absolutely.
And we have to continue to vote, whether by an actual vote or by our purchases, the things we create and share, and beyond. So I'm right there with you. So, what did you know about how the wealthy structure their money offshores that founders should know, founders and investors?
That's an interesting topic to bring up to the conversation. I do know quite a bit. As you may recall, I was a private banker for the largest bank in Canada, that shall remain unnamed. But specifically, my education and background brought me to these. My father was a banker. He worked for the central bank, as an economist. And I was, I guess, raised to be a banker. There is a lot of value and I would say secrets that are not necessarily spoken outside of the rooms of the top banks, the private banking law firms. And these are not necessarily bad. What I can say right now is that there are reasons why people structure things. And if you see it from the standpoint of an entrepreneur like myself, where I have devoted more than 5 years to this project, where I have poured my life, millions of my own dollars into a project, it is difficult not to argue that I need to capture as much as possible and monetize it for my family, which brings us to taxation, which is another interesting topic that is controversial at this point in the US and everywhere else, which is what is fair. We hear a lot of the Democrats and liberals and people in the left talking about the fair share. And you have to ask the question, what is the fair share? How do you define that? When someone has, again, taken the route of becoming an entrepreneur to basically commit 100% to a project, it is very hard for someone that sits on a cushy job. They have all the benefits, they have a pension, they have all these things to say, you're not paying the fair amount. And you say, it's interesting you say that because you're taking zero risk, yet you're getting all the upside and you have no skin on the game. So, what is the fair amount? And so, when you structure for the wealthy, there is a number of entities and structures that are used, if properly, in total compliance with what is called bilateral tax treaties, which are, for instance, a lot of people do not understand and do not know that the US has its own zero tax jurisdictions. Delaware comes to mind, right? Delaware is one of the tax havens within the US. And so when you structure a limited liability corporation in some of these states, you're able to shield, mitigate, and transfer some of the hidden costs that have been built by bureaucracy and the government through the process of encroaching on our private property. So, call it, for instance, the tax on your investments after you pay taxes. Why should you pay taxes on taxes? That seems to be ridiculous, right? If I bought my house and I bought my investments with my after tax income, and we'll go to tax income in a second, but why should I give you more if I have taken the time to grow that? It's aching to, and I explained this to my nephew, thinking about you drinking your creatine, is aching to people in the left saying, oh, why should you be healthy and strong? I want to be healthy and strong. Then you should go to the gym, eat properly, sleep properly, and do all the things that I have done in order to become a better person. You cannot expect to eat bad stuff, do not exercise, and not do anything and have the same results. It's called meritocracy. It's a natural process. And the way that things are structured for the wealthy is beyond this conversation, but I will say that there are ways for you to structure properly your affairs so that you can actually reinvest your capital, which is a key component of this conversation. A lot of people do not understand. For instance, there is a concept called I think it's called the Bahamas or the Bermuda Sandwich. And so a corporation, and many other corporations in the world do these, they create an entity in one of these jurisdictions that has a low income tax, potentially no income tax, and it might have a number of tax credits for them to enter into that market and expand into servicing that market. And the problem and the misconception that has been pervasive is that companies do this to avoid taxes, but the reality is that an enterprise only focus and objective is to grow and create more income and create and generate more market penetration. So if you understand that from the view of shareholders and those who eventually do employ a lot of people, because corporations employ people, right? Then you understand that if a company creates a entity on Bahamas for the purpose of moving through Latin America or the Caribbean, is because potentially the US does not have that bilateral tax treaty that will allow them to maximize the capital that they will be able to invest and minimize the tax burden that they have to do. So they will basically triangulate that. Ireland is a very famous and well known jurisdiction in Europe that allows a lot of the companies in the US to operate within Europe, even though Ireland is not even in the continent, but is part of the EU. And so, what can I say today is that there is a lot of compliant ways to create your corporate structure. I happen to know many, if not all of them, but it's something that is necessary. It's almost like the cost of doing business.
So for a company that wants to expand to Latin America, would leveraging this and also cryptocurrencies be a recommended or preferred approach, or is there a different way that maybe is more traditional that would be better for a company that is started, built, grew well in the United States and wants to tap into or serve the Latin American market?
I think that we would have to go deeper and get to know more about the details of the companies. But generally speaking, yes, a lot of the companies that operate in Latin America create a subsidiary in one of these islands. Usually they were English protectorates like Barbados, Bermuda, Bahamas, and they create a Latin American management holding company that will allow them to benefit from a low tax structure that will enable them to offset and transfer. It's called transfer cost, and this creates also another barrier so that they are not necessarily subject to US regulation or the local jurisdiction regulation, because there's so many of them that if you were to do that it will be cumbersome, right? So yes, that will be probably one of the ways to expand into Latin America. And this beyond fintech, this has been used by companies in the oil and gas, mineral resources, and others. They do that, yes.
And then cryptocurrencies, would they be an essential part of that as well, considering the fluctuations of currencies in different parts of South America? Or is there some different approach from a currency perspective that would be recommended to a company that wants to get out and expand into Latin America?
Yeah, obviously, some cryptocurrencies come to mind, Ripple and Stellar, which are the two preferred ones. And as they are direct descendants from the Swift banking system, have become prevalent and the most accepted medium of exchange in Latin America. In fact, I think Ripple is dominant in the market. So definitely cryptocurrencies and stable coins will play a role to mitigate the cost of not only the foreign exchange fees, but also the arbitrage between the risk of having an exposure. Some of the banks in Latin America, some of the large fintechs have already accepted this technology or implemented this technology widespread. And this has had a major positive impact on every aspect of the operation of companies. It is important to know that a lot of the island nations, for instance, Barbados, I was speaking to some members of the political and business groups in Belize, for instance, have not necessarily, is not homogeneous. So some places like Bahamas has a very comprehensive and interesting number of opportunities. Barbados is moving towards that. Belize doesn't have that. And it really varies. And that's why it's, again, important. Sometimes you wish that you could do away with lawyers and accountants. And half of my friends, or most of my friends, are lawyers and accountants. So, no pun intended to them. It's not that you want to remove them, but this is one of the fundamental pieces of advice that we have been helping companies in the past, which is corporate structuring. And this is way before, obviously, I got involved into the world of cryptocurrencies and digital assets. I used to do these with my circle at the bank and after the bank.
Last two questions here. Do you ever think Trump is going to get rid of the IRS? Do you think that's possible given the current balance? One thing I read today was that Trump, from the tariffs, generated 15 billion, I believe it was last month. Probably more than that, but I just have to remember exactly. But it was a small number relative to the 5 trillion that is gained from the IRS. Is it ever possible that system could be replaced and that we have the ERS, as Trump has coined it to be, the External Revenue Service?
Wow, that would be the day. I believe that there is a certain level of taxation required. The government, the way that it operates today, is not ideal. Clearly, bureaucracy has become a challenge and an unnecessary burden for the economy, especially in countries like Canada, where we have three times in, if you actually do a ratio of population to number and headcount, we have probably upwards of almost five times the number of tax bureaucrats and government people looking after taxes, which is onerous. Speaking about the US, I believe that this income tax needs also to be revamped. I do not believe that you're going to be getting away with removing the IRS, not during our lifetime at least, and definitely not with Donald Trump. But I think that the opportunity is there to actually modify the system, because a number of the way that taxation works is pretty simple. Essentially, it allows the government to create revenues from the economy so that they can operate and administer the government. That is, in simple terms, what they should be doing. The problem, again, is human nature. When you create a system that needs to be balanced by encroaching on private property, and there's never the thought process of how do I cut down cost, how do I remove pieces that are necessary, then you're going to have a problem. The way that today the Senate operates in the appropriation committees that they have, where the senators basically request money from the Treasury, is a problem. And it is a problem because, going back to the founding fathers, when the US was created, senators and bureaucrats were actually paid per diem. And it was created that way by the founding fathers because they recognized that the moment that they made them a necessary evil and they created a salary, they would become lifers. They would create a system that incentivates the increasing encroachment of government in the affairs of business people. And so the reality is that today the system is unsustainable. I have information from 2010 where the US was spending $1.5 trillion more than it was actually bringing in revenues. And that has actually increased. Today, we know that the debt of the US is pretty much out of control. To your point, I think that the US will have to deal with the IRS. I believe that there's a lot of room for Elon Musk and the Department of Government Efficiency to cut on basically waste and outright fraud, which should result in hefty penalties, if not some things that I'd rather not say out loud here. It is sufficient to say that in China, if you do anything that even remotely comes close to what is happening in the US, people have lost their heads. And
No, literally.
I'm talking literally.
Yeah.
I think that the opportunity for the US to reform taxation is going to be a key component of moving forward, how the US will survive or will transition into the leader of the world or not. Because who's going to buy more US bonds when you don't know if the US is going to be there within the next 30 years? And I hope that I'm wrong, because I do wish that the US stay here forever. But if the government does not realize that there's not enough money to go around, it's going to be a problem. We see this in Canada here, where people do not realize that pension funds, government pension funds in the US and Canada, are running huge deficits. As the baby boomers start to basically retire in mass, the money is running out and is leaving the banks faster than ever. And this is probably what's going to precipitate or become the catalyzer for these digital dollar, is basically the inevitable reality that the government mismanaged the taxation, and that politicians, unfortunately, were not necessarily representing the needs of the people. I hope that I haven't said too much stuff and I end up like some people in a ditch. But it's the truth, right? This is the reality. And I think that we're still on time. I'm bullish about the US. I'm bullish about the Western world, but we need to be very careful. And I want to salute you for taking this path and bringing others to hear about, not only this is an exercise on democracy, right? It's an exercise on how do we preserve our way of life. If we do not understand that this is the way that we can preserve the way of life that we have, then we need to ask ourselves, are we willing to live like the Chinese? And no pun to the Chinese themselves. I'm talking about the Chinese system or other systems around the world where you have zero freedoms, there's no upward mobility, and you will never be able to own anything. Is that the future that we want? I don't think that's the future that we want.
Agreed. Surveillance and monitoring and limitations, less money, more money going to the top to manage the central structure.
Yeah,
The list goes on.
that's right.
Final question. What is the question that founders or investors should be asking themselves after listening to this show as they return back to their lives or their businesses or their investments? What questions should they have in their mind for themselves?
My personal choice for that question will be is how do I maximize my profit without eroding those pillars that have allowed me to maximize my profit? How do I build a system that is actually more robust, resilient, and sustainable? And I'm not thinking about the definition of resilience and sustainability that the left has misused over the last 20 years. I'm talking about the thought process that was happening at the beginning of the Industrial Revolution, where a number of people were centered around the East Coast of the US and eventually spread around the US to create an ecosystem that allows competition and allows collaboration. Because you can think that you can own everything, but we have seen it today with Google and Facebook. I believe that they're under threat of being basically split apart, like it happened with Standard Oil 100 years ago with Mr. Rockefeller. I think that the issue is for us to realize that the mentality has to be of plenitude and that bountiful mentality that we can expand, we can multiply. I'm looking at the cross in front of me and it's calling me, and basically using the Lord's knowledge to multiply the breads. How do I create more breads? Just because I
Hmm.
give you half of my bread doesn't mean that I'm giving you that I'm losing. I need to think that our ecosystem in North America used to grow and neighbors used to help neighbors, and that the ecosystems that are strong, like in Silicon Valley and used to happen in New York, I'm not saying it doesn't happen right now, are the ecosystems where you leverage and you help others in your surrounding. Because if your neighbors are doing well, you'll do well, directly or indirectly. If you actually think about it again in the sense of what's happening in Latin America, if you have a group of people that increase their income from minimum wage to three times the minimum wage, that person is going to buy more bread, is going to buy more clothes, is going to travel. The actual waterfall increases and multiplies. It's called a money multiplier. And we need to think about that. We need to be obviously aggressive, but we need to think that if we completely erode and do away with our economy, like unfortunately the baby boomers, and no pun intended to the baby boomers, my parents are baby boomers, they were handed the economy in a silver platter. And they basically now are claiming that China stole their goods. No, you were just too lazy and wanted to have too much money. You didn't realize that if you eroded the industrial base of the US, people will become poor and they will not have money to buy your products, which is contrary to the idea of Henry Ford. You need to pay enough to your workers so that they can buy your goods and they can have a healthy lifestyle and income, because that is the way that you expand and grow an economy and maintain the rights and freedoms that you have come to basically be entitled to, but you should preserve and move forward.
Great point. An excellent question. I've already been asking it to myself as you've been talking and have some good insights here. So, for everyone listening, make sure to subscribe to this content. We'll drop a couple links for Eduardo's information down below, ways to get a hold of him, website, and other things like that. So, Eduardo, thank you for being on the show, episode 53, and we welcome you back sometime in the future.
Thank you very much for having me, Jacob, and keep up the good work.
Thank you, sir.
God bless. And God bless America.
Hey everyone, thank you for watching this episode of Titans Up today. What did you learn from it? Make sure to drop a comment below with your most valuable insight so that other people can engage in the conversation around what this speaker brought to the table. And then on another front, make sure to subscribe so that every time we drop a new episode, you will be notified. And that way you can keep fueling your dreams and your brain with fresh insights which can help you along your journey and along your path to your goals. So thank you so much again, and I look forward to seeing you in the next interview.